This is Andrew Stotts of A. Stotts Investment Research to talk about the Global Equity FVMR Snapshot, or what I like to call the world markets in your hand every week. Let's take a step through what's going on in the world markets from the way I look at it, which is fundamentals, valuation, momentum, and risk. First, we start off with fundamentals, and I look at both emerging and developed markets. What we can see is ROE in 2016 is expected by consensus to be about 11.7%. We can see the lowest ROE is in Europe at about 9.7%. And in developed markets, Japan continues to suffer from a very low return on equity. Finally, North America is the highest return on equity, and we can see that developed non-US, therefore, when we back out the US, is at a pretty low 9.5 to 10% ROE. On a dividend payout ratio, the lowest level is happening in Europe, and we can see the highest in developed Europe, and that's the difference between what's going on in emerging Europe versus developed, a pretty big difference there. Valuation, well, the world is trading on about 16 times for 2016. Emerging markets on about 12.5, so a pretty significant discount. Europe's on an amazingly low, and this is again emerging Europe, is on an amazingly low 7.7 times. If we look at North America, it's been a safe haven, and the result is a PE that's very high at about 18 times, the highest of all the regions. Price to book, lowest in emerging Europe, down below 1 times price to book at about 0.8. And in Japan, in the developed markets, is the cheapest at about 1 times price to book. In fact, a friend of mine just told me about how he thought Japan was the best place for retirement for an American guy because everything's gotten a lot cheaper than 15, 20 years ago. And with slow population growth, you can see that the stress on the infrastructure is minimal. Let's continue on with momentum. And earnings momentum, very, very high in Latin America as it's recovering and seeing its ROE come back, and hence its EPS growth up almost 42% this year and 25% next year. You can see Japan is at about 12.6%, so not bad, but it's a recovery there that's going on. And what we can see is from a price momentum perspective, over the last 12 months, the most painful place to have been was Japan as far as the equity market. Now, developed non-US was down, hence because of Japan was down about 12%, US about 3% up. The only market region that was up besides Latin America. If we look at risk, what we can see is that gearing is relatively low at 33.7% for the prior 12 months. And that is compared to about 47%. So what we can see is emerging markets have a low level of risk, and emerging Europe does too. So the recovery, the cheapness that's happening in Europe and the slow recovery in EPS, we can see the good news is that leverage is low. Where leverage is high now is in North America, where it's at about 70%. Price volatility, we can see actually is relatively low in Asia right now. That's emerging Asia, whereas that used to be very high. And now that volatility is happening more, as we can see over the last year, about 16%, which is about in line, let's say, with developed. So developed and emerging Asia are about in line, and that's about in line with the US. But the volatility that's really being felt out there is being felt in Europe and Japan. That's developed markets. So what do I see from fundamentals? According to consensus estimates, US is expected to have the highest profitability and developed Europe the highest dividend payout ratio. ROE and dividend payout ratio are lowest in emerging Europe and Japan. Valuation, well, emerging markets trade well below developed. Emerging Europe is cheapest, while US drives up global valuations. Emerging Europe trades below book value, but offers better ROE than, for example, Japan, and that trades at only 1 times price to book. Momentum. Well, consensus expects earnings to rebound in Latin America in a big way, and the region has the second strongest price performance. U.S. has shown the strongest 2-week and 1-year price performance. Risk. Well, U.S. has the highest net debt to equity, and emerging Europe the lowest. Price volatility has been slightly higher in developed markets, driven by volatility in Japan and Europe. So, if you're interested in getting this FVMR snapshot, you'll always be up to date. You'll know all your numbers. You'll be professional and do nothing. Just sign up below. Or if you're already at babinow.com, go to FVMR-snapshots. Have a great day.